and good morning, everyone. As Sophia mentioned, I'm Sean. I'm delighted to be here with you today on Zoom, talking about, as I always say, everyone's favorite business plans. We're going to be going over a pretty cool tool that we've created at the SBDC to help businesses, do this business planning process. I know what you're thinking. Business plans, right? Well, don't worry, we got your back because, well, let's be honest. Business plans are, well, sometimes they're costly if you want to hire it out, but overall, they're very confusing and time consuming. So today we're going to be going over a tool that we've created to help hopefully make the business planning process a little faster, easier, and free. Because I'm not cheap, I'm frugal, and I always look for a deal. But that's the whole motivation behind our creation of this program or this website. I guess you might call it an online tool that we're going to be going over today. Because, well, the business plans are hard, and we work through it a lot with businesses here at the SBDC for a variety of reasons. So if you're on the line today and you're maybe in the startup phase, might be doing a business plan to evaluate the feasibility of the business venture that you're planning on going into. It's going to take some time, some talent, and some treasure. And you want to make sure you think through the business plan. But even if you're an established business who's been around for a long time, you may be looking for a loan, and your business banker might say, we could use a business plan to help bolster this loan application. So the business planning process is definitely something you're going to revisit throughout the life of the business, I'd say. And well, we're here to help. And as you can hear the fire trucks go by, we hope that everybody's okay there. Our office is very close to the fire station here. But no, we're going to go through this, but there are some ground rules. Sophia went over the housekeeping for our Zoom meeting today, but the ground rules for doing a business plan, I would say, are kind of threefold. Number one, be real with yourself. A business plan is only as good as the assumptions it's built on. So as they say, garbage in, garbage out, we want to really be real with ourselves as we're going through this process. Rule number two is to keep it simple. We all follow the same rules in business, which is sales minus expenses equals net income. So don't make it harder than it has to be or fancier than that. And rule number three, and probably the most important rule, is do it yourself. Because although we offer free one-on-one consulting to help you through the process of developing a business plan, the business plan exercise is really valuable in the process. It's not the pretty business plan at the end of the road that's really valuable. It's the thought process that goes into the business plan. Because as they say, failing to plan is planning to fail. So we want to really plan out what we're trying to do with this business, whether we're just getting started or we're looking to grow and expand in one way. Or maybe you're just looking at your business going, okay, how am I doing? Where can I grow or expand? So we use the business plan as a tool to help kind of peel back the onion, so to speak, with every client that we work with. And all our consulting services are 100% free. So definitely check us out if you're haven't accessed the SBDC. But what we're looking at here today, let's just get right into it, shall we? I like to get to it. Is we're looking at this website that we've created. It's located at businessplanproject.org. This is the tool we're going to be going over today. And well, it's first things you're going through your mind probably is, how do I get access to this tool? Because we have, you can contact us or log in. And for those that are on Zoom watching today, you're already a client of our SBDC. So all you have to do is email us at sbdc@laverne.edu, include your name, your phone number, and what we'll do is we will create a login account for you. If you're watching this on Facebook or YouTube, you will have to click this sign up now button and sign up for our services, because our services are free, but we have to create an account or a profile for all the clients that we work with. So just know that if you're watching this. And you're probably asking, Sean, why can't I just create an account right on the website? Well, we're federally funded, and that kind of goes down to some of our FAQs here. There's some businesses that we just can't work with. Those that are not considered small by US SBA standards, which pretty much they have a really big standard. I mean, that's like in some cases it's 500 employees, but generally most businesses are going to fit within that parameter. But if you're based outside of California, we are funded by the California. So, but the big one that we often see, we can't work with businesses that are engaged in illegal activities under federal law. So like CBD, we can't do any gambling, or if it's a prurient sexual nature type business. So we have some extra rules that we have to play by, and that's why we have you sign up. But I will mention as we get started, we're on a website. So the best browser to use, we recommend using Chrome if you're using this. You can use Safari and Mozilla, but we have seen some performance issues. So we definitely recommend using Chrome. And you will need a website, or sorry, you will need a computer. This doesn't work so well on mobile friendly devices just yet. This is like our minimally viable product that we've created at the SBDC to help our clients be better prepared and more successful. So with those housekeeping items out of the way, I will also mention this tool might not be for you, but what we're going to go over today is a variety of the sections of the business plan. And we're actually going to get a business plan. We're going to go through it. So I'm going to log in to an account that I've created just for today's webinar. And we're going to go through the sections of the business plan, why they're important, but more so, we're going to actually plug that information in and get a business plan. A lot of people ask me, oh, Sean, how long does it take to get a business plan? And I'd say, well, it depends on you. If you have all the information, it's not very long at all. But again, it's not the plan at the end of the road, it's the planning process. And you'll hear me say that time and time again. But as we just logged in, you may have noticed also one thing, it takes about 10 to 15 seconds to log in, because this page that we're looking at right now is a very heavy kind of page in web development terms. So if you're logging in for the first time, give it some time. And every time you navigate away from the page, it will also take a little bit of time. So that's the drawback to this tool. But when we log in, we are already on the business plan page. I'm gonna go across the top here. But we also have a menu item where you can schedule an appointment. You've heard me say that before. You can, schedule an appointment via Zoom, let's say, Friday at 11:30. So you can definitely access the consulting to help make sure you can navigate through the page or the website. You can also log out. That's pretty much it. But I'm going to go back to the business plan for now, because that's what we're going to be working on today. And that's pretty much what this online tool does, is it helps us create that business plan. And you can see that the website is going, but every time you navigate away from this particular page on the site, it will take a little bit. So that's why we put that little timer there. So you're like, is it working? Come on, Sean, is this thing working? Well, we want to make sure that it's working for you. But across the top, we've got those menu items, but really the meat and potatoes of what we're talking about today is down here along, I wouldn't call it the bottom, but in the middle. What we've done is we've essentially reverse engineered the business plan into a bunch of questions and answers. So you can focus on the content of the business plan rather than formatting a document. And we'll show you how you can get the business plan out of the website to edit further or share with others in just a moment. But let's take it from the top. Right now, you can see we have a bunch of different sections we're gonna go through, some of which have numbers. Well, we've taken all the formulas out of that process and made it focused strictly on the assumptions. Because as I mentioned, the business plan is built on a series of assumptions. So you got to be real with yourself. I forget if that was rule number 1 or 2, but it's a very important one. So we try to make it easy. We add some placeholder text in each box or under each question, like what's the name of the business? So the placeholder text says Joe's Plumbing, but for today's example, let's go with Sally's TKD, Taekwondo. My son used to do Taekwondo, so I always like to use that as an example. But you got what year is it? It's 2021. What's our website? If we had one, we can plug it in here. I will point out one thing on this particular field. You have to add the HTTP, because otherwise it'll give an error, like it's not a real website. So just heads up there. My email, let's see here, @Verne.eu. Our phone number, let's see, 909. My name and our address. California 91750. And we've already completed one section of the business plan. Woohoo! The contact page, or the cover page that has our contact information. So you can go down to the next section, which is the business description section, but I forgot to point out there's these little tooltip icons all along the way that if you hover over it, you'll actually get a nice little video of yours truly explaining the section.
Here in the business description section, it's pretty straightforward, but we want to lay out for the reader kind of who we are, what we do, maybe address some of the top.
I was half tempted to just to play the videos for this webinar, but I'm not going to do that today. But there's some pretty cool sections that will help us through this process of putting together the business plan. I've already gone ahead and input a lot of text for our first two sections so we can kind of expedite the process of this webinar. But what is your industry? Taekwondo, I'm in the martial arts industry. What are our top 3 goals over the next 24 months, a year or 2 years? And pretty much what I've done here is I've typed in the placeholder text that I've got. But over the years working with business owners, there's usually kind of 3 categories, secure financing, reach a certain level of sales, staffing maybe, or what was the other one I was going to say? Maybe just even getting started, doing a business plan. So I'm saying we're going to focus on securing some financing for this startup business. We're going to develop a campaign to introduce the business to the community and reach monthly break even by month 6, which is also a really key component of doing a business plan, is to know what is the level of sales that you need to be at in order just to sustain the business. And we're going to get to that. That's kind of a little foreshadowing. But other things in this section might be, what's your mission? Here you kind of say we do what, for who, by how. And I'm saying, our mission is to build a community for parents and children by empowering students to be their best in their daily lives through the study of martial arts, because martial arts is definitely a lifestyle. Let's see, how's the company structured? In my example, I'm going to say we're an LLC. How many owners are there? I'll say it's just me. Let's make it easy. And I would caution you, the more owners, I would just caution you there. Write a full sentence about who owns what portion of the business. Sean owns 100%. What type of business? Again, martial arts business. What year was it established? Let's say we just started it this year in July, for our example. Who founded it and how many collective years of experience the founding members have. Because I will say one thing, if you want to have a successful business, having some direct industry experience is going to be key. That's definitely why a lot of bankers will ask for your resume to see okay, does your experience align with this if you're starting up this business? And so hopefully I've got 12 years. Let's say I'm a black belt. My son is actually a second-degree black belt. So maybe he's the one starting this business. But the last part of this section is, well, not one of the last, is what are the key success factors that we're going to focus on in this business to be successful? And this is mainly for the reader because they probably don't come from the industry the way you do. We got to explain to them what we're going to focus on to really make sure that we're successful. So obviously having a good reputation, being able to attract local patronage, easy access for clients, good product promotion, and well, we're talking Taekwondo and black belts, so access to highly skilled workforce, probably going to be important there. But write a sentence, like what are you going to focus on that's going to be really critical to the success of your business, and explain that to the reader. And the last part is what major products or services are we selling in this business description? We got to kind of lay the land. And so we're saying we're going to do monthly TKD memberships and belt testing, because every month my son would always take a test, maybe a month and a half, going from white belt to yellow belt to orange to green and so forth. Well, that would we would charge for that, or we would have to pay as a customer. So I'm going to keep it simple. You have more categories to add. Same thing with the success factors. And if you have 4 success factors, don't feel like you need to plug in 5 just because it's there. This is just to get you thinking and help develop a plan that addresses all the usual components of a business plan. And the narrative part is usually what people have when they come to the SBDC. They say, I have a business plan. But what I really like about this tool that we've created is it helps marry the narrative part with the financials. And we're going to get to that in a second. But that's why you see down here this calculate button, because there's a lot of calculations that will run every time we plug in some financial information. And rather than have it run every time, we pulled it out in a button that when you make the changes, then you can click the button and see how it really affects the financial performance of the business. But aside from that, on every section, you'll have this save button. And we're going to click that to save our business plan. And you need to click this button before you do one of 3 things. Before you log out of the website, before you close your browser or before you navigate to another page, let's say like the schedule an appointment page. If you do one of those three things before you click save, it will lose the data. And we don't want you to lose your data. So I really emphasize those three things. Before you log out, before you close the browser, or navigate to another page, please click that save button. You don't need to click it if you're just going between the different sections, which I'll show you in a second, but we want you to keep your data so you can keep working on it, because it might take you a few times of visiting the site and working with your consultant to get through the whole process, and that's okay. We're going to do it in one sitting, so put on your seatbelts because it's going to be a lot. We just went through one section, and now we've clicked save, and it says that our data has been saved. Click the link below to download, because this is what everybody wants. They want the business plan, which is great. But again, as you've heard me say before, it's not the plan, it's the planning process. But if you want the plan, you can download it you can email it to yourself or click this blue button and download your Word document business plan, which is pretty cool. Basically, it just takes all your answers and plugs them into the right sections of the business plan. Again, so you can focus on the content and rather than formatting a Word document to then share with somebody. So you will see when you're going through this that like this is what we just filled in. Well, congratulations, you've done now 2 pages of the business plan. But you will see some gaps and things like that need to be kind of tightened up or deleted if you don't necessarily need that section. Like we didn't list 6 products or services. So it gets you, I would say 90% there, but you will have to do some editing, stuff like that. So I'm going to continue on and go back. I'm not going to save this, but you can save it. I'm going to go back to the business plan by hitting the business plan menu item at the top. Again, we're going to give it probably 10 to 15 seconds. You can see it's loading. Again, it's a very heavy kind of page. And we're going to continue through the rest of the sections. The next section is going to be marketing. And in this section, we really want to explain to the reader 4 main category areas of our business. 1, industry trends. 2, target market. 3, competition, and 4, marketing strategy or outlets, how we're going to let people know that we exist. So let's take it from the top. Industry trends. We got to kind of set the table for the reader in terms of, what's the overall industry like? Again, they probably don't come from the industry the way we do. So at the SBDC, we've got some pretty cool market research tools, if I could say so myself, where we can help you get access to the industry and, like narrative stuff. Hopefully you come from the industry so you know what's going on, but I'm going to cheat a little bit and I'm basically going to copy and paste into our business plan the executive summary of an industry report or some other source, so we can kind of like sound like, oh yeah, we did our research. It just kind of like sets the table. But I'm also going to be looking at your resume to make sure that you have that industry experience. So here is what you've seen. I've already gone ahead and kind of copied and pasted that here. But it kind of makes it bolster the plan a little bit, like, hey, what is the forecasted industry growth rate over the next 5 years? We can get that from some of the resource tools that we have access to through the SBDC. We don't have everything, so I'll caution you. It's not like, but we do have some pretty cool tools. Next, we want to explain to the reader, first, high level industry. Second, very low level target audience or target market or your ideal customer, however you want to phrase it. Here we have to explain to the reader who we're going after and what are their top 3 needs and how we're going to meet those needs. And you can see it explained here. It says, how would you describe your target customer? Well, for our business example, we're saying parents of children between the ages of 7 and 15 who live within 15 minutes drive, who make an average of 100,000 or more and are looking for extracurricular activities to keep their children physically and mentally fit. Keep them out of the house, keep them busy, because idle hands are the devil's playground, right? So, but what are the top 3 needs of that customer? We're going to, in this example, say they need something that's easily accessed, great teachers and cost. So that's here on this left-hand column. And then right adjacent to that, to the right, is how are we going to meet the needs that we just identified? Well, we're going to have a great location with ample parking and complimentary anchor stores. So if you want to hang out and watch your student or your son or daughter do Taekwondo, you're more than welcome. But if you need to go over to Albertsons or Costco or, whatever, do your errands, you can do that too. That's going to be a convenience factor. Good teachers, well, all our teachers are going to be, experienced, but really focus on all age levels. And what's the cost? We're going to be competitively priced. We're going to say we're going to offer 2-week free trials for those that are like, I think I want to get my son or daughter into Taekwondo, but I'm not sure. I'm not ready to sign up for a monthly subscription or an annual kind of gig right now. So that's how we're going to meet that need. It's totally up to you, but this is really important from your marketing perspective, putting these top 3 needs and your marketing and all facets. And we'll get to that in a second. But sorry, I didn't mean to yell. I get a little excited sometimes doing this business planning stuff. The competitive analysis. Now, this is the next section that if you don't come, and even if you do come from the industry, but if you don't come from the industry, you really want to take some time. And here we have to answer, who are our top 3 competitors at the bare minimum? Let's say, for example, we have Coolest TKD, we've got High Kick TKD, and Hiya TKD in our local area. Now, once we've identified our top competitors, now we kind of have to see how we rank up against them in different categories. So down here below, you're going to see that I've identified some categories. Again, kind of off of the needs, but a little bit more expanded. Good teachers, parking, close by, cost, good reviews, trial offers, and so on. Here, you want to take a deep dive into your competition. Look at their reviews on different platforms like Google or Yelp. See what customers really like about it, what they don't like. Again, you come from the industry probably, so you know what you're going to pride yourself on. And you want to scroll down here. This is the first time I'm going to hit calculate, because what it's going to do is it's going to take these names that we've identified as our competition and plot them right across the top section here, because we're going to have our business. And of course, a lot of people will say on every category, we're awesome, but be real with yourself. But how does Coolest TKD kind of compare when it comes to teachers? Let's say, yeah, everybody's got good teachers. But in terms of Coolest TKD, the parking is a little hard. And a lot of people complain about being able to park there to, access the dojo. So go through with a fine-tooth comb and do this periodically. Secret shop yourself. If you're an established business owner out there, get a friend or family member to call or to buy from you and see what your process is like and get their feedback. Because oftentimes business owners, you set up your processes and it works, and then something changes later and you aren't aware of it. You don't have a feedback loop to hear that from your customer. So definitely take some time here to go through line by line, close by, cost, good reviews. It's a really important part to see how you differentiate from the competition, because if they're not buying from you, they're likely going to buy from somebody. So we want to kind of emphasize why and what we pride ourselves on. We never want to speak ill about the competition, but we want to know what we pride ourselves on in our business. And the last section of marketing, before I'll pause for any questions. So if you've got some questions, get them in the queue now. Is where most people start with, I think, marketing plan is, what are the outlets you're going to use? Oh, we're going to have a website. We're going to have all these, outlets. Well, we make a drop down here to make it kind of easy, but we need to address 3 main areas in the marketing outlets or strategy section. What are we going to use? What's the cost? And why is it important? And so we got the drop down here where say website, email marketing, social media, events, and directories. We can use up to like 8, but you can see here, I kind of just focused on my top 5. And, website's going to run us $500 a year. Let's say it's going to be used to house useful information related to products, service, location, FAQs for prospective clients, the email marketing, and so forth. So write a sentence like, you say this is important to help educate your customer. Now explain to me why. And it's not hard, but it just makes you think. Again, left brain, right brain. I'm big on like copying it down, because one thing I know from the studio that we went to, movie nights, my favorite. I said movie nights are going to be used to encourage members to bring their friends to experience the studio, while it's at the same time allowing mom and dad with their friends to go out on a date night. I so miss the Taekwondo studio for that one. It was once or twice a year, and we would be able to, they would do a little movie. It was awesome. And the parents could kind of go, catch a bite to eat or something. But that's going to cost us money. Let's say we got to spend $2,000 a year on pizza and other kind of ancillary costs. But that's kind of it for the marketing section. But that is what I would call a bare bones kind of marketing plan. There are many more things you could add to a marketing plan: SWOT analysis, external scans, tons of stuff. But at the bare bones, we got to explain to the reader how we're going to let people know that we exist and we understand where we fit in the market. So I'm going to scroll back up to the top. Before I move on to the team section, I want to pause for any questions that we might have, because I know I'm moving fast, but we're getting right to it. So any questions so far?
As of right now, we don't have any questions, but we did get a couple. We will be sending you a follow-up email with a recording of our presentation today, with instructions on how to get access to your business plan login by emailing us at sbdc@laverne.edu. But there's no other questions as of right now. Thank you.
All right, I know I'm going through it quick, but that's where we have the consulting to help supplement this as it relates to your business, whether you're an acupuncturist, a barber, a hair salon, or a mechanic. I mean, it's all similar but different, but the same rules apply. And now we're going to start moving into some of the financials. And we talked a little bit about costs in the marketing section, but we're really, the biggest cost in a lot of businesses is payroll, your team. So here in the team section, we got to explain to the reader, again, 3 things: who's involved, what are they going to do, and how much are they going to cost. So let's say we've got 2 people for our example. As I drop down, it says, how many team members do you have? As I drop this down, we've got now 2 team members we have to fill in. So let's say Sean Snyder. I'm going to be the owner. I'm going to be full-time. And as I said before, I've got 12 years of experience. Watch out. And for my responsibilities, a lot of business owners say, oh, I'm responsible for everything. Okay, well, write it down, because I want to know and evaluate your team from that roles and responsibilities. So I can, again, peel back the onion and say, well, who's going to take care of bookkeeping? But let's say I'm a single member LLC. So technically, and I'm just getting started, so I don't know if I can afford to pay myself something. So I'm going to leave my hourly rate in hours per week blank, because technically any money I make through the business, I have to pay tax on. But I don't know if I can afford myself just yet. And that's a very legitimate question. So we're going to do this financials to see how much can I pay myself? And then I'm going to talk with my accountant to say, how should I pay myself? So we're going to come back to that, but let's go to team member number 2 for now. Let's say John Doe is going to be an instructor for us. He is going to be part-time, and let's say he's got 2 years of experience, and he's going to be responsible for helping us out with instructing the classes, new client sign up. Somebody walks in the door, he can go run over there and be like, yeah, this is our plan. This is how you can sign up, 2-week trial, and just supporting our day-to-day operations. And for that, let's say we're going to pay John Doe $13 an hour, and he's going to work 20 hours a week, but we're starting in July. So I'm going to make that July too. And since he's an employee, we're going to have to pay some payroll taxes, and we can just check these off. They are optional because depending on the involvement, contract, volunteer might not apply. But since he's an employee and we are doing Taekwondo, someone's bound to get hurt. Hopefully John doesn't get hurt, but the state requires us to carry a workers' compensation plan. And let's say we quoted that out and it's 2% of wages. Then we can add retirement, health care insurance, other benefits if we offered those. But at a bare minimum, payroll taxes and workers' comp is what I see most. And now, without further ado, we can hit calculate, and it will take all the math out of having to calculate our payroll budget. But payroll is a big expense for business owners, and you really got to be keep a keen eye on that in terms of, where is that money going? So right now we have, starting in July, because you can see this is all a bunch of zeros. In July, we have about $1,100 in wages, and then we got payroll taxes to contend with. So out the door, we already have $1,260 a month to cover. So, and we haven't budgeted for ourselves. So that's another thing. But that is the team section. We answered those 3 questions: who's involved, how much they cost, and what do they get responsible for? Now we're going to move over to another section. The next one is the starting point. Again, we're starting this business. But if you're an established business, what you're going to be plugging in here is your balance sheet figures. To do a projection, you need a starting point. And so if you are established, basically you're going to plug in all the figures that are on your balance sheet for long-term assets, current assets, liabilities, and owner's equity, because that's what we're doing here. We're establishing a starting point for the projections. But if you're a startup business, now what we need to do, and we often do with clients, is we walk you through what I call the ingredients list, maybe, because you want to start this business, and I compare it to making a new dish. you need an ingredients list, and instructions on how to put together that dish. Well, same thing for a business, but we need to list out what we're going to need. And the different categories, first and foremost, is long-term assets. And again, you got the little the video tutorials here to help you through. But long-term assets are a little bit different than short-term assets in that they have a useful life, and you can often depreciate them over that useful life. So you're like writing off the loss in that value over a period of time, but it's not really like a cash expense. So talk about this with your accountant, but generally you will depreciate things to $2,500 each or something that has a longer life. But it's really business by business and establishing that threshold. For example, at Verne, I believe our threshold for depreciation is like $10,000. It's pretty high, but every small business will want to establish something similar. But what do we need? So this is kind of like our grocery store aisle. Do we need some land for this Taekwondo business? No. Okay, then pass it up or pass over it. Do we need to buy a building? Maybe one day, but not right now. We're just getting started. Do we need to fix up the place? It's called tenant improvements or leaseholder improvements. Sure. Yeah, we need some of that. Do we need equipment? Yeah. Do we need furniture fixtures? Yeah. Do we need vehicles? Nah, we're good. And other would be in a category that you could use for like, I don't know, I've seen like liquor licenses or things that don't really fit into another category here, but does have a useful life. So let's say for tenant improvements, I don't know, we're going to spend $30,000. Let's see, 1, 2, 3. And as you tick off each one of these categories, you'll notice them populate down here. And a big thing that we help a lot of business owners with, especially the startups, is like, what do I need a budget for? What is tenant improvements? And that's where we have this gray placeholder text to help you kind of see if it would apply to you. Because tenant improvements is kind of like utilities. There's a lot that goes into it: water, trash, gas, internet, all these other things that kind of add up, and it becomes a big number. And you're like, oh boy, how did we get to that? But let's say we need, I don't know, $30,000 to come in and do some mirrors on the wall so people can see their forms, some flooring and matting. Maybe we need to add an office wall or partition, some construction. But do talk about this with your consultant and your advisor, because you don't want to invest this is where you get into that. Should I pay for it? Should the landlord pay for it? This, kind of who's going to pay for this? But you do want to keep a keen eye on it. And then you can generally probably write it off of the life of the lease, and when are we going to start this depreciation? So let's say we're starting this business in July. Equipment, yeah, let's say we're going to need about $5,000 for some computers, some phone system. Let's see here, 5, 1, 2, 3. And don't plug in commas. That's the one thing I would mention here. It won't add it up correctly. July. And let's see here, furniture and fixtures. Yeah, we need to buy some tables and chairs for people to sit on, maybe for our desk or our office if we have one there. Let's say that's what, $4,500. Okay. And again, July. Okay, these are the long-term assets. Now we need to list out, so that would be like your long-term assets on the balance sheet. But for short-term assets or operating capital, now we list out some other things, like what else are we going to need to buy? And just to get started, again, for my startups out there, this is before you take your first dollar for subscription. So let's say, yeah, we need some prepaid insurance premiums to sign the lease, because that's probably going to be a clause in the agreement, is that we carry some general liability. We need some inventory, legal and accounting fees. I'm just going to check off a lot of these. And the big one, though, is working capital, cash on hand. And I'll get to that in a second. But let's say prepaid insurance runs us $1,000. I'll say, again, you've got the gray text here, depending on your type of business. If you're a medical professional, you might need some malpractice insurance, but I'm just going to say gen liability. And I would emphasize adding the notes, because sometimes you come back to this and be like, what was that $1,000 for? If you don't have a note to yourself, that's going to be kind of hard to remember or figure out. Let's say, yeah, we need $1,000 for, I don't know, trophies and, belts, or not belts, what were the uniforms, and then legal and accounting fees. Let's see, what did I say I was going to budget for that? $1,000 for, let's say, LLC setup and lease review, because, well, if our lease, which is the next question, let's say $5,000, let's say first and last month's rent, at, I don't know, 2,500. If I'm signing a lease for 7 years, you can do the math. 2,500 times 12 times 7, that's a pretty big number. So when we sign that agreement, that's what we're on the hook for. So we want to know what we're signing. So do read your lease, please. If you're listening out there, read your lease, have someone look at it, give you some feedback, because that's a big one. Utility deposits, sometimes, like when you rent a new apartment or something, when you're just starting out, they will say you don't have a lot of credit. Maybe we're going to charge you 1 month's, typical utility bill. So that's kind of self-explanatory. Supplies, what do I got budgeted for supplies? I said $500, for some, I don't know, punching bags, stuff like that, or paper, toner. You can see where I'm going. Advertising and promotion. Yeah, we are going to have a big party when we start out. We're going to say $3,000 for a grand opening with our local chamber. Definitely check out your Chamber of Commerce, our awesome resource, especially when you're starting a business, to get to know the community. Sometimes you might live in a different city and you need to get built into the fabric of that city. So check them out. Grand opening, and let's say, I don't know, ad campaign. Can I spell? Oh, no, can't. I love this because I'm a horrible speller, so it'll give me that little red line. I can right click. Let's see, licenses and permits. What did I say? I don't know, $500 for the city business license, but you can see there's a ton of different types of licenses and permits in this gray text here. Conditional use permits, hopefully not. Those are pretty pricey. Oops, not better. City business license, but you can see how this starts to get a little intimidating, right? There's a lot of stuff here. And the big one that most people forget about is working capital, cash on hand. Because it's like, well, it's not an expense to the business, but we're going to go set up this LLC and we're going to have to set up a bank account, right? Because we want to be able to take people's money. Well, the banker is going to say, well, how much are you to deposit into this business? And I'll say initial cash deposit, because it takes money to make money. And this is a prime example because we need money to operate the business. And what I often compare working capital to is, or cash in the bank of a business cash in the bank for a business is like gas in the tank for a car. You would never get into a car to drive somewhere without looking at the gas tank to make sure you can get there, right? Same thing for a business, but instead of gas, it's cash. We got to get this business to a certain point, and it's going to take some operating capital, working capital, cash on hand, whatever you call it, so to run the business. And we never want to be on the side of the road, so to speak, hitchhiking, because then we're going to the banker saying, hey, we ran out of cash. Can we have some more? And they're going to be like, yeah, I don't think so. So thinking it through, the planning process is really what's key here. I'm going to say I'm going to drop $20,000 that I've saved up into that bank account because I'm really committed. And now what we're going to do is we're going to scroll down and hit calculate. And it's going to add up what we just did, long-term assets and current assets, essentially, and tell us how much is it going to cost to start this business. So we've got $72,000 to start this fictitious business, mind you. Now, where's that money going to come from? Well, it's got to come from somewhere. And so we've got sources of funding. So if you're on the established business watching this, you're going, okay, this is where you have your owner's equity and any other liabilities that you might have on the books. And it's important to pull your balance sheet from time to time, because a lot of times when you're looking for a loan, you don't really look at your balance sheet too often. You look at the income statement and, are we making money? Where's it going? All that stuff. But the balance sheet sometimes gets a little mixed up. Definitely pull that and look at it from, I would say, quarter to quarter at a minimum. But I'm going to say we're going to come in with some money. Let's say 40,000, because again, we saved our money up. We're, coming into the game with something. And for the sake of this example, the difference for the total required funds that we're going to go get I don't know, $32,000 commercial loan at 7.5% interest over 5 years. And again, that's going to start ideally when we start the business in July. Now, we need to write a sentence about that, because anybody reading this business plan is going to say, okay, how did you get to these numbers? So the assumptions are key. And what are your startup costs based on? So I'm going to paste that in here, saying that our starting point costs are based on projected startup expenses determined to be $72,000. $40,000 will be contributed by the owner. The remaining $32,000 will be financed via a business loan. You wouldn't believe how important this one statement is to anybody looking at a loan request, because most people don't, they do the numbers, but they don't explain how they got to them. And they just say, here you go, figure it out. Well, if you give someone who's reading your business plan a little understanding about what went into it, because hopefully it was a good amount of time, it will pay it forward in spades, however they say it. Trust me, it will be well worth it. But that's it for our starting point tab. And I know it was a lot to go through, but it's very important to think through how much money is it going to cost to start the business, in addition just to operate it. And we're going to get to those operating expenses in a little bit. But I would always recommend saving, but for the sake of our example, I'm going to scroll back up to the top, and I'm going to go to the next section, which is DNA, not DNA, but depreciation and amortization. And luckily on this tab or section, whatever you might want to call it, there's nothing that needs to be done. We just included this because I wanted to show you how we get to some of the expenses that are going to show up on the income statement and the cash flow statement later. So depreciation, that's where we're writing off that useful life that we just listed out over the value divided by the useful life. It's using just straight line depreciation. But under the amortization of that commercial loan, oh, I have to hit calculate. Let me go to, you can see all the math here. That's why we pulled out that calculate button. But I'm going to go down. It's going to populate, because what I wanted to share here is with our commercial loan, we have a payment of, well, this is principal and interest. We can only expense the interest. You can't write off the principal. And that's why I wanted to show you how we got to the interest expense. So, but quite honestly, there's nothing that needs to be done here. It's just more of a, oh, it's nice. And a lot of work that went into that. So you can tell. Now we're going to move into the sales. And I'm going to pause for effect on this one, because this is the most important part of the business plan, if I do say so myself. And the first thing is, how many major products or services do you sell? We're going to say, what are we going to say? Let's say 2. Again, I think it goes back to that description of the first section where we said monthly subscriptions and belt tests. So as we say 2, we're gonna have to fill in a little what I call product or service menu. What are we selling? So monthly, I'm gonna say memberships. The unit is something that throws a lot of people, but each membership is sold to a student. So we're talking students, and let's say it's $120 a month. There's no real cost of goods every time we sign up a new student, so we can move on to the next. And that's going to be, let's say, belt testing. Every time we graduate someone or test someone from white belt to yellow belt and so forth, we charge them, again, let's do students, $50. And for the sake of this example, just to kind of show you how the website works, I'm going to say it costs us $3 because we have to buy a belt and a trophy. Because technically there's a direct cost. Every time we make $50, we have to pay for that belt and that trophy, but really it's kind of not really material. So it's up to you where you want to categorize that expense. If I'm talking to other business owners on the line, let's say mechanic, you're doing parts and labor. So you might have your number of jobs here, the average job. If you're a hair salon or a barber, haircuts, the average haircut costs $20, $50. I don't know, color, I know that's expensive. But we've worked with a lot of business owners, because a lot of people categorize their expenses, but they don't really categorize their revenue. And not to say you have to, you could drop it all into a line that says sales. But when sales aren't hitting expectations, it kind of makes it harder to understand why. And that's really what we want to be able to do here. And we were going to force you to set sales goals. Expenses, which we'll get to in a second, are pretty easy. They're straightforward. Oh yeah, we got rent, we got this, we got that, and we know what it is. Sales, on the other hand, is a little bit more harder to pin down, and we have to set some goals for ourselves. So I'm going to go down and hit calculate one more time so we can kind of bring down the text that we plugged in up here. Down here, you'll see monthly units sold, and here it's going to say membership monthly units sold. And what we need to do is we need to say, how many students we're going to have sign up. And let's just say, for the sake of example, we know we have about 40 kids or, type 1 dose students that will be willing to join our dojo. How we got to that, it's totally up to you, but that's what we're starting with. And it needs to be a real assumption. And then we're going to add to that. And we're going to say, I don't know, we're going to grow by 5 students a month. The assumptions are really up to you. And that's where if sales aren't meeting expectations, it comes back to that assumption. And you need to know how to pivot or adjust. But I'm going to say we're going to grow by 5 students a month for the first 18 months. Pretty straightforward assumption. Question is it going to come to fruition? I don't know. Only time will tell, but it's what I think. And so we have the months laid out here, and we have 2 was this a row? Yeah, we have 2 rows. Year 1, and again, I'm starting in July, so I don't have to worry about the first 6 months, because this is going to be like what I call our stub year. It's not a full 12 months of operating revenue and expenses, but then we're going to fill in year 2, 75, 80, 85, 90, 95, 100, 10, 20, and 125. So that is what I'm goaling myself on. Whether this business makes it or not, I want to see, what the profitability is with this assumption. Secondly, we have another product or service. We are going to say that we charge $50 for belt testing. And let's say on average, we do about 20 students a month. So you can kind of copy and paste this. That'll be our assumption. Again, assumptions are key. No one can argue with your numbers, but they can't argue with your assumptions. And that's on you. And you got to know what you're going into the plan with. But that's our plan. Keep it simple. So, in addition to coming up with that, we're going to have to write it down, right? If I'm looking at this from a banker's point of view, I want to know what were these numbers, these sales figures based on. So I wrote a sentence basically just explaining that. The business has 2 main revenue sources, monthly memberships and belt tests. Revenue projections are based on starting with 40 students in month 1 or July and ending with 125 students by the end of year 2. Each membership will cost $120, and we're projecting to grow by 5 students a month for the first 18 months. Additionally, students will be offered belt tests once per month and cost $50. The average student, on average, 20 students will be tested each month, and there's a small cost of goods. This is what your whole business plan is based on. This statement right here, can you make this happen? Because ideas are easy. It's implementation that's hard. Guy Kawasaki, love that quote. But really, now what we can do is hit calculate. And all it's going to do is it's going to take 40 times 120 plus 20 times 50 to get our total sales, which will, wait for it, boom, $5,800 in sales. We do have a small cost of goods because we had 20 students times $3, or what was it? I'm doing the math there for a second in my head. I was like, well, that doesn't add up. But yes, 20 times $3 is $60. So we have a gross profit in month 1 of operation of $57.40 to run the rest of the business. And that's where we're going to go to next. So I'm going to do expenses and then pause for questions because that's pretty much almost the end of the road. But that's our sales budget. Sales minus expenses equals net income. And knowing what goes into that is very important from both ends. And anyway, I'll get off my soapbox here in a second. But expenses, now this is more straightforward, cut and dry. We have, it says, what operating expenses do you have to pay for to run the business? And again, we have a list of kind of tick box items that align with our Schedule C. So if you're a sole proprietor or a single member LLC and you file a Schedule C, you might find these categories similar. I've marked off advertising, insurance, licenses and permits, contract labor, legal, and so forth. But every time you tick something off, you have to plug in, just like the sales, year 1 projected expenses and year 2. And so I got $500 a month from our marketing section where we talked about what we were going to use to market the business. We had a website that cost us $500, social media, we're going to do ads, $2,500. So I added this up and kind of budgeted about $500 a month. You could be specific in terms of timing that expense rather than just put 500 evenly. You could know that, we're going to drop a lot of money in, 1 month over the year, because you will have some seasonality to some expenses. But you can see I explained that to the reader here. What is this for? It's website, email marketing, social media ads, events and directories. So what else? I got contract labor. I'm budgeting $100 a month for bookkeeping services. You know, maybe I don't like bookkeeping or I'm not good at it, so I'm going to hire that out. Insurance, some expenses will only hit once a year, and I've got $1,000 for general liability insurance. You know, you could pay for that monthly, you could pay for that quarterly. It's totally up to you and how you manage your business. Legal and professional, I budgeted $500 in year 2 because I know I'm gonna have to pay my taxes and prepare that. So I might hire someone to do that for me. I'm also an LLC, so under licenses and permits, I put the annual LLC fee or tax. I always forget which one it's called. Rent, $2,500 a month. That's a big one. And I have a 3% annual renewal that starts, it's not much, but it goes from 2,500 to 2,575 in year 2. So I want to account for that. It's an extra, $75 a month. I'm not cheap, but I'm frugal. That can go somewhere else. And you got utilities, $150 a month for, water, trash, internet, etc. This is where I, as an SBDC consultant, can kind of go, I don't know about you, but my electricity bill is close to $100, $150 a month during the summer months. Are you sure that doesn't need to go up more? Because I always want to be have a little budget high on expenses and budget low on revenues, so that hopefully you come in over than expected on revenues and under than expected on expenses. But this is what's important. Thinking through those regular operating costs. They're slightly different than our starting point costs because those were the ones just to get started. We had to fix up the space. We had to take out some insurance before we could sign the lease. But now that insurance rolls over to our regular annual operating expense, and we want to account for it. So I've already kind of had those plugged in so I could save time. You didn't have to see me go 150, 150, 150. But you can see we have basically operating expenses of $3,250 outside of our depreciation, outside of our cash, our loan payment, outside of our payroll, but there's different categories to consider. And I guess I'll stop here before I move on to additional information to see if we have any questions. But hopefully we're breaking it down. You can see how this is a little intimidating, but we give you the structure to kind of go through and peel back that onion. So any questions so far?
Yes, Sean, we have a couple questions. The first question I answered in the chat, but I'd be happy to hear your feedback. The question is, what if you do not have a defined competition because your business is relatively new and innovative? I recommended that you schedule an appointment to meet with one of our consultants. They can, talk with you one-on-one, talk about your specific business and help you work through that competition section. And wanted to hear your feedback.
Yeah, and if you watch my video under the marketing on this competition section, I actually say it. Don't be one of those people that says I don't have any competition. Everyone has competition in one way, shape, or form. I know there's some innovative stuff, but even like this website, we have competition. We're not the first to do this. We are, though, the first to make it free. But there's a lot of other, even though this is an innovative program, there's a lot of people that have done this before. And if they don't buy from you for your product or service, where are they going to go? There's likely a way, but I agree with your response there. Let's talk that out. Let's think about it.
Mm-hmm. And our next question is just curious as to whether we should credit our sources in the business plan from our research, basically referring to the marketing section, if they should cite their source.
Yes, and in here, whenever we definitely want to give credit where credit's due, and so it talks about IBIS World being the source, because that's the thing. You want to also not just say, oh, we grabbed this from XYZ blog site, but we grabbed it from a credible, reliable, industry-leading source. Absolutely agree with that.
All right, and that's all the questions that we have right now. Thanks, Sean.
All right, well, let's keep moving on because there is one last section, because the other remaining tabs here will pretty much auto-populate based on the assumptions that we've plugged in thus far. But there is one more section. It's called additional info. In here, you want to kind of spell out for the reader any accounts receivable or accounts payable assumptions. Most businesses that we work with are going to be cash businesses. meaning you get paid within 30 days. But if you have like, I don't know, a construction kind of company that's, out, you have a lag and, you deliver the service and you don't get paid for 30, 60, hopefully not 90 days, but you can account for that. The important thing here is you want to make sure that everything is 100% on both accounts payable and accounts receivable. You can't even budget for allowance for bad debt. I wouldn't recommend that. I would look at that hard and say, why are we writing off people who didn't pay us? But it's an important assumption. Scrolling down, we have line of credit. So we, as a business owner, even though we're planning to be successful, we still want to have access to a line of credit. And the question we have to answer here is, what is your desired minimum cash balance? Kind of a funny question to think about, but everybody has a different threshold. How long do you let your personal bank account get before you go, okay, I'm going to put this expense on a credit card? Everybody's a little bit different. But for my example, I would usually go to what are 1 month's operating expenses that we need to cover. So I'm going to go over a sneak peek real quick at the cash flow statement, because the cash flow statement is just cash coming in and cash going out. And it's the money maker or money loser, I call it, because, well, if you don't have enough cash coming in, you got cash too much going out, you're not going to be in business for very long, because cash is king and cash flow is queen. But we can go down to the cash outflows section, and I can kind of look here and kind of see, oh, I already budgeted myself here. We have about $5,700 of, monthly expense of cash going out. So at a bare minimum, what I would probably plug in here is 1 month's cash flow expenses. Let's round that up and just say 6,000. Now, that's great to have a threshold of, where, what's your minimum and all that good stuff. But if you do need to pull out that company credit card, what is your interest rate? And this is where you're going to need to talk with your banker. But I'm just going to say, I don't know, 7% for sake of example. But you want to have these conversations about lines of credit, about financing well in advance of needing them. That's going to be key. Other sections on this would be income taxes. And it's defaulted to 0 because everybody's different. But if you wanted to, you can budget based on your personal income tax bracket and your holistic situation. So talk with your tax preparer, because you don't want to get hit with a tax liability. Because I'm starting this business as a single member LLC. Any money the business makes, I have to pay tax on. So I want to be able to account for that. And just for sake of example, I'm going to go with, 20%. The last section here is new fixed asset purchases. So if you bought something in the middle of the year or past the starting point, you could depreciate that later on as well, because a fixed asset is something that has a useful life. It's not just you're going to use it in that first year. I don't use it too much, quite honestly, because usually I kind of build it into the starting point. But if you want to be really key on the month that you buy this asset to depreciate it, you could do that. I'm going to hit calculate because we've just done a business plan. So to answer that question, it probably was on a lot of people's minds. How long does it take to do a business plan? Well, it's 11 o'clock now and we started at 10 a.m., right? Pretty sure. 1 hour, people. We just did a business plan in 1 hour, which is great. We plugged in a bunch of assumptions, but it's the process that we go through and the thought process. It's not the document, because we can make the numbers do whatever we want. And let's take a look at those now. Let's look at the income statement. Income statement is a good statement to look at I guess for a variety of reasons, but to make sure you're making income, how much? So we're going to say in July, we're planning to bring in 5,800. Again, that goes back to our sales assumptions. What was it? 40 students at $120 per membership plus 20 students taking a test at $50 a test. We had a little cost of goods for our belts and our trophies. So really we have pretty much 100% margin almost, but $57.40 to operate this company. Well, then we had payroll that we talked about, paying John Doe. We had operating expenses for rent and insurance. We had our depreciation that we're writing off. That's a key difference between the income statement and the cash flow statement. The income statement will include non-cash expenses, but we can deduct this on our tax returns. As long as they're necessary, reasonable, talk to your accountant. I'm not a tax preparer. But we had interest on that loan, that $32,000 we had to get a loan for, not the principal, but the interest. That's an expense. We didn't have a line of credit and we didn't have any bad debt expenses. Everybody paid us. Woohoo. So $5,200 in total expenses. You got 57 coming in for the month minus 5,200. We have a net income of 537. And then those pesky taxes, because we said we wanted to, allocate 20%. We know we got to pay Uncle Sam. So our income after taxes, our net profit for the month is 430. So you can see we're actually making money. That's the real thing here on the income statement is, are you making money, or is this a negative, and why? We don't want to get into that situation. And if we do for any period of time, we want to know we have a strategy around it. We have the line of credit to, some businesses have a seasonal line of credit, which is fine, but you need to front a bunch of expenses and then you're going to make a bunch of money afterwards, making sure that's thought through and you have access to that line of credit. If you scroll down, you've got year 2 down here, but I won't bore you. The other thing I would mention though is after the income statement is the cash flow. And it's very similar to the income statement with the exception of the depreciation. It's just cash expenses. So we're starting out with 20,000 in the bank. That's what we dropped when we opened up the bank account, right? Cash coming in was 5,800 and now cash going out. There's some additional boxes here that we may need to fill in if we needed to buy additional inventory, because the website will just assume every time you sell one unit, you can go back and re-up at the exact same price, and you only need to stay at that beginning starting point balance of inventory. If you need to increase that, you could get into that additional capital expense, because it's going to take money to go buy that inventory, and you got to have the cash to pay for it. We've got our cost of goods, our operating expenses, very similar expenses to the income statement, but we have some extra ones down here. If we ever do run a line of credit, the website will not assume that if you make money in 1 month and you had a line of credit, you're going to use that to pay it off. We had to manually kind of go in and say, yes, we're going to pay that credit card down. If we had investors, and let's say we have some sort of dividend arrangement, we're going to pay them quarterly. We can factor those in here. The one you see here for $500, that was me. I meant to delete this, but I was originally going to say, now answering that question, how much can we afford to pay ourselves? This is where we see that answer. And you could basically subtract, 500 from this. So, or add to it, I should say. But this is where we can see, do we have the cash in the bank to even pay? And you got to have that really heart to heart with yourself and say, how much do I need to cover my own personal living expenses based on my holistic situation? But those are the type of questions. How much should I spend on marketing? How much should I spend on myself? Or can I pay myself? They're really important to address and answer. It takes pushing some numbers around to figure those answers out. But at the end of the day, after paying ourselves, we make $88. So we still got to pay tax on that too. But, that's where you also want to talk to your accountant about, like, how do I pay myself? If I do an owner's distribution, now I'm just taking money off the balance sheet, and how do I count? So that's important too. But if I were to summarize this statement, we're basically saying here, we're going from a $20,000 cash position, where we start, to an ending cash balance, because cash is king and cash flow is queen, to 27,000. And we've paid ourselves 3,000, but we're also netting about $7,076. So we again are making money. This is where we really want to evaluate the time, the talent, and especially the treasure that we're going to invest of our own earnings, into this business. This is the real end of the line for the financials. But with this information, not only do we have a balance sheet that, balances, because I've seen so many projections that don't have that, but the break even. I know when you go through this exercise, like, okay, great, I'm making money. Well, what level of sales or units sold do you actually break even? That's the hard and fast. We need to be able to get to this number of students or this number of belt tests. And so here I've already made it 6 months, because this is a startup business starting in July. But what we can see is we have, based on our projections, roughly 100% gross margin. We only have the $3 for the belt test, and that wasn't really the bulk of our sales. But we have about $31,000 to cover. So if we make 99 cents on every dollar that we sell, and we have to cover 31,000, you can divide the two and basically get to a break-even level of sales. Now divide that by the number of operating months. We need to be selling about $5,000 worth of products or services each month. Well, what are we selling? We're selling memberships and belt tests. So we need to be doing about 38 students a month and 14 belt tests before we start to make money. Now, if you remember back on the team section, we didn't list ourselves as payroll. So it's not including like owners, distributions. So we could adjust that to see, okay, what level of sales, if we want to pay ourselves, I don't know, $50,000, some number that we've determined, that will then need to be recalculated. But this is really, I would say, the aha or oh no moment. This is where I would look to you if you were going through this, and I would say, you know, Sean, can you bring in 38 students? Can you do 14 belt tests a month? Or in a full year, 42 students and 9 belt tests per month? You would either say easy peasy mac and cheesy, or oh no, I can't do that. And now we have that, okay, if you can't do that, now there's only 3 ways to grow a business. You increase sales, you cut expenses, or you improve your margin. Well, our margin's already pretty much 100% because we're a service-based business, right? We've got a bare bones expense kind of situation. Maybe we have to get rid of John. You know, John Doe, sorry about your luck, but you got to go. And everybody goes to increasing in sales, but it's easier said than done. So we'd have to really dive in deep in terms of how you're going to do that. But alternatively, I would say, well, how long would it take you to get to 42? Because if you said, I can't do 42, but I could probably get to 30, you know, right out of the gates, and it would take me a certain amount of time to get to 42. That's when we need to go back to that conversation about gas in the tank of your car and cash in the business and the bank of a business, and say, okay, well, maybe we need more cash to go through to get you to that period of time where we can, you know, finally make those break-even levels of sales. But this is where break-even is such an important concept for the business planning. And it's also, if I'm lending you money, I want to know that you know your numbers, and I also want to kind of look at your break-even, what you said, and then I'm going to probably half your sales. I'm going to do what they call stress testing. What if everything just goes sideways? Because like what famous boxer once said, everyone has a plan until they get punched in the face. Then your plan goes out the window, right? Well, we at least have a plan, but what happens if you get punched in the face? And I'm going to stress test that to say, okay, well, what if you don't do as well as you thought? Well, what if you run into a $10,000 legal claim, like, you know, on both sides, cut the revenue and increase the expenses? So I talk a lot, but this is where we use the business plan to really have some heart-to-heart conversations about you, your business, and what you're trying to do. And everybody's in a different spot, different position, but we say get from A to B, and that's up to you. Where are you at and where are you trying to go? So this helps us do it. And hopefully you found this presentation useful. You might find the tool, you know, more constructive to put the numbers to paper. But that's kind of all I had. That's all we got for you, folks. Thanks for joining us. But I'll turn it over to Sophia, see if we have any other questions.
Sure, of course. Right now, we don't have any questions, but if you have any questions, feel free to put them in the Q&A feature. You know, just to let you know, and a reminder, we're going to be sending out a follow-up email with our recording. If you'd like to set up an appointment, please give our office a call, and I left our number in the chat. And if you'd like to receive your business plan login information, please email us at sbdc@laverne.edu. And I also left this in the chat. Yvette says, thank you. Thank you so much, Yvette, for joining us. I also have thank you for the class. Do you guys offer other classes, and where to look for them if you do? And I can go ahead and take that question. So our center, along with our regional LA Network Center, offer a variety of different workshops and webinars. And there is a network event calendar that you can access, and I'll put that in the chat for you. And it's like on a variety of different topics. If you'd like to know our most available or everything going on, any workshops going on with University of Laverne SBDC, I suggest to sign up for our newsletter where we put out our content on YouTube, our blogs, our webinars, and I'll make sure to put that in the chat. And I just want to say thank you so much to Sean for this great presentation. And I hope that everybody got the most out of this webinar. It was such a treat to learn so much about our new website that we're using. And let's see here. Let me take a look in the chat. Okay, I went ahead and put the link for the workshops, and I'll make sure to put those links in the follow-up email as well. And just a bunch of thank yous. Thank you so much. And let's see here. No more questions out right as of right now. And I just want to say thank you again, Sean, one more time. And lastly, as we wrap up, if you'd like to set up an appointment with an SBDC consultant, please sign up if you're on Facebook. And if you're in Zoom, give us a call. And thank you everyone so much for joining us today. And we'll see you next time. Have a great day, everyone. Bye-bye.
Bye.